It's fucking depressing. This is related. Wall Street is pushing private assets into 401ks. So it's all, the picture's kind of starting to come into focus. We've got more retail investors than ever before in the market. We have unsustained valuations that are all built off of projected growth and the projected productivity gains of AI, aka more DoorDash. And now the Trump administration is trying to move to please, they're trying to hand a big gift to asset managers. They say that they want them involved in private credit and private equity. If you're not familiar, private equity is an industry that's been booming for a long time. Sometimes they're called shadow banks. They are the companies that are responsible for taking some of the companies that we know from growing up and gutting them. So your Toys R Us's, your KB Toys, your what are some other like private equity takeovers? There's all these big firms that do leverage buyouts. And then they fire everybody, they restructure the company. Here we go. Dunkin', Hilton, PetSmart, Toys R Us, PF Chang's, Keurig, Dr. Pepper. Vimeo was just bought out by a private equity firm. So they buy the company, they load it up with debt, they pay themselves massive bonuses, and then they slash costs to make it cash flow positive, and then they sell it off again. That's the plan, rinse and repeat. They take the money, they borrow it, they load up their balance sheets, pay themselves a fuck ton of money and sell it off, not while all the workers get fucked. That's private equity. Private equity is also getting into sports. Private equity is making big investments in sports, in youth sports, in the NFL. The NFL just approved a 10% cap on private equity on teams, allowing private equity foreign funds to invest in sports teams. The United Arab Emirates is getting involved. They're seeing big money to be made from sports. The Saudi investment fund is private equity. The company that did Live Golf, that is doing the Riyadh Comedy Festival. They're doing a music festival now. Like this is literally private capital. Private credit is a part of this industry that has also been booming over the last couple of years. And these are basically unregulated banks lending money. Wall Street's biggest asset managers say they want to give everyday retirement savers access to investments. Notice the language that they use. They want us to access these investments, such as private credit and private equity, which have long been the domain of elites. President Trump signed an executive order in August meant to speed up the process. One problem: 401k investors aren't exactly clamoring for these new opportunities. Do you wake up on random days and think, I wish that my 401k was being used by private equity barons? Like, is that, I don't know about you guys, but that's what I think about when I wake up. I want my 401k in the hands of the people that are making money off of Argentina so that I can make that money. Only 10% of investors say they're dissatisfied with their current 401k investment offerings and want more non-traditional options. First, it was crypto. Come on, let us invest your 401k in crypto. Now it's private equity. Now it's private credit. Why? Because these markets need to continue growing. They're running out of investors. They need more people to rush in. They need the idiots. They need us. They need the retail people to invest so that they can take our money. They're not just taking the police union's money, their retirement funds, their pension funds. They need everyday people's money because they don't fucking have enough. They need to get on Hedge Weekly. Apart from cryptocurrency, Americans know very little about these alternative investment areas. Nearly 40% of respondents reported never having heard of private credit funds, for example, and only 15% say they were highly familiar with them. In their most current form, such funds raise money to lend to privately held companies, a private bank, holding the loans and passing the returns on to investors. Still, many Americans seem potentially persuadable. Some 59% of respondents say they had general interest in investing in private companies. So this is like if SpaceX takes out a loan from a private credit lender, how do I get involved in that? When told, with average revenue of 110 million and nearly 90% said they would be comfortable allocating a portion of their retirement savings to private investments, with some 30% willing to dedicate 10% to 14% of their portfolios to them. Blue Owl Capital, that's a big one. They're angling to bring private assets to the $13 trillion 401k market. These people are frothing at the fucking mouth at our 401ks. Why? Because no matter what kind of return, if this market fucking goes belly up, they take their management fees and they buy another yacht. They buy their yacht, they buy their private island while you lose your fucking 401k. Many private market firms have already generated interest in their products among wealthy individuals, but it will take high-powered sales and education. Sales and education is what they're calling the fucking swindling of people's 401ks, to persuade regular American investors to put part of their life earnings into private assets with no regulation, zero regulation. Just put it there. Just buy a house, doesn't matter, refinance later. Nothing bad is going to happen, they said. Apollo's taking out investments at advertisements to boost their brands. Get your Apollo at leisure. Susan Cortez, 24, said that while she's never heard of private investments, she's open to learning about it someday. I wouldn't want to venture into something like that until I get more experience. They want to democratize investing, these private asset managers say. With fewer publicly traded companies to invest in, putting money in private ones allows for better diversification, say. This is better for you. This is less risky. This is better for your portfolio if you have a company that never has to report financials holding your money. Obviously. It's more safe when you don't know what they're doing with your money. For some investors, the idea of being led into restricted clubs is appealing, but there are real trade-offs. Though most people don't trade actively in their 401k stock and bond holdings, they can make changes if they want to. Private assets work differently. They have historically delivered strong returns over the long haul, but there are restrictions on when and how the cash can be removed during that time. They also tend to charge higher fees than funds that invest in publicly traded securities. Totally altruistic. They just want to help democratize investing. It has nothing to do with them getting paid higher fees to do it. Employers ultimately decide which investment products to offer their staff through 401k lineups. Consultants and layers say most large employers are currently reluctant to adopt higher fee products for fear of being sued by plan members for mismanagement. President Trump's executive order issued regulations making it easier for employers to include these offerings. They're hoping that it'll reassure employers interested in alternative investments, but they're concerned about lawsuits. The growing dominance of target-dated funds, 401k plans, which serve as a default plan for most companies, is why private markets investment firms are pushing to get their products into them. This happens through partnerships with asset managers. Logan Reed said he wouldn't want to put money into private investments unless the fees fall significantly. The Chicago architect said keeping fees low is a reliable way to earn higher return, way to earn higher long-term 401k returns. Blue Owl was investing at the US Open. Yeah. So if you see an Apollo ad, you see a Blue Owl Capital ad, you see a BlackRock ad, it's because they're trying to get your fucking money. They're running out of money and they need yours. That's what's going on with these private credit companies.